You are watching Market Watch, the brief overview of the key events from the world of finance. Following an unexpected decision by U.S. President Donald Trump to delay the imposition of 50% tariffs on EU imports until July 9, European markets posted gains. The move came after a phone call with European Commission President Ursula von der Leyen, who requested more time for negotiations. As a result, the euro strengthened to its highest level since late April, and investors began returning to European assets. However, despite the positive trend, caution remains due to the unpredictability of U.S. trade policy and potential consequences for exporters such as Germany. The tariff delay triggered a rise in the euro and other risk-sensitive currencies like the Australian and New Zealand dollars. The euro climbed to $1.1418, the Australian dollar to $0.6537, and the New Zealand dollar to $0.6031, levels not seen since late 2024. Meanwhile, the US dollar weakened against the yen and Swiss franc amid growing concerns over the national debt and Trump's proposed sweeping tax cut package, which could widen the budget deficit by $3.8 trillion over the next decade. Oil prices rose after Trump extended the EU trade talks deadline, easing fears that new tariffs would hurt global fuel demand. WTI crude climbed to $61.87. Additional support came from a drop in the number of active U.S. drilling rigs, now at their lowest since November 2021. However, the price increase is being capped by expectations that OPEC Plus may raise output by 411,000 barrels per day in July and fully roll back voluntary cuts by October. Bitcoin is on the rise amid instability in global bond markets. Climbing bond yields in the U.S. and Japan, weakening global growth, and declining U.S. consumer confidence are driving increased interest in cryptocurrencies. The yield on 30-year U.S. Treasury bonds has reached 5.15%, the highest since October 2023. Investors are beginning to view Bitcoin as an alternative to traditional safe haven assets like government bonds, particularly in light of growing concerns about debt sustainability and inflation. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.